When I was young and broke, I used to think gold is pompous and stupid. Now that I've been leveraging gold as an investment strategy, man, do I have a different perspective. Especially right now, if you know anything about economics and inflation, this is a great time to talk about gold. Let's talk about how it fits in your portfolio. Should you be investing in physical gold or perhaps in stocks? Gold miners? What's the potential gain here? We're going to be talking about all of this in this video coming up. Before we dive into whether gold is a good investment or not, we're going to first touch on all the ways that you can invest in gold. If you're already well versed in this, please skip forward. But if you're not, my first comment is you don't need to invest in physical gold unless you want to own something and see what gold is like as a chunk of metal. Physical gold is mostly an investment if you live in a underdeveloped country that is unstable, like for example Syria or Venezuela, where people really literally need physical gold to get out of the country. Their currency, their literal currency from the country is so untrustworthy that they're paying with chunks of gold to immigrate in a kind of illegal way, I suppose. It is what it is, and it's still happening today. It's super sad, but that's the real world. For everyone else who is more fortunate in even having the opportunity to think about your investment portfolio, I recommend that you look at ETFs, gold as an ETF. So basically gold as a stock. There's also a more speculative way of approaching gold, and that is to buy gold stocks in mining companies, because you're not only are you making a judgment call on the performance of gold, you're also making a judgment call on the performance of these mining companies as well. And with ETFs, there's also other speculative trading aspects that you can play with. For example, some of these ETFs are leveraged by 2x or 3x. So depending on how gold moves, that ETF will move 2x larger or 3x larger than that, right? That is incredibly powerful if you're looking for a shorter term trade. Of course, if you're holding that for long term, then you're bloody crazy. So you might ask yourself, why should you invest in gold, right? And I think there are three. So you might ask yourself why you might want to invest in gold. And there are three main reasons. The first reason is that gold has been used as a currency since the dawn of time. And because of its finite nature and the fact that it can be used for so many different applications, of which I'll talk about later, it is inherently valuable, and it is something that no one can really mess with. Unlike, for example, diamonds, right? Where the supply is manufactured and controlled by huge monopolies, and that's why diamonds are valuable. Or for example, when the government is printing more money because they need more money in terms of literal number wise, they need more money, that will definitely cause either a artificial supply demand or an artificial inflation or deflation in this point. So to briefly touch on that, right now Donald Trump is doing the stimulus plan for all of the people around the United States. In fact, everywhere around the world, most countries are doing this right now because of the coronavirus. It is very important that this is done because people are in need and they need money to survive. The challenge here is that the money didn't actually exist. So the government is literally printing more money. So it's equivalent to me trying to sell you a pair of shoes on the currency that we've agreed on, and then I, in front of you, print out more of that money and try to pay you with agreeable amount. Of course, you being a logical person and knowing that I'm doing it, you're going to ask for more for that same product, right? And so that's essentially what causes inflation. And this is why gold is a better investment, because gold cannot change. You cannot print or manufacture more, unlike money. So when money is being printed, then physical goods will cost more. So things like shoes, food, even real estate and gold, those will increase in value. The second reason is that gold has a lot of industrial applications. It has great heat properties, and it also conducts electricity. That's why you see it on the end of your audio jacks. You also see on NASA rovers. And in fact, in all of your electronics, like this camera or your laptop, your phone, they have bits and pieces of gold embedded in it. There are literally billion-dollar industries built around recycling gold because of this reason, right? Because gold is valuable and it's finite. So it's really, really expensive and it drives up the cost of everything. And that makes it worthwhile to recycle it. The problem is that according to the BCG report, I think only about 20 or 30% of gold around the world can be recycled, which means that a lot of it does go to get permanently used, and therefore gold becomes more finite as well. It's not just being traded as a currency, it's also being discarded. The last important thing to note is that gold is also used in jewelry all around the world since the dawn of time. Just like it's being used as currency, it's also being used to inherit pneumatic value, right? So as a family heirloom, you might be buying stuff in gold, and that stuff, and the nature of jewelry is that it tends to get hoarded. And when things get hoarded, it creates this artificial supply and demand issue where the price of gold or price of whatever it is will go up. So a funny example is that there is a deck of cards out there called the Nugget playing cards. It used to be produced by this casino out there that doesn't exist anymore. Because the Magic community deemed that these are really, really high quality cards to do cardistry with, they became super attractive for purchase. Before that happened, these decks were about $5 a pack. After that, some guy in French decided to buy the entire supply of 20, 30,000 packs that were left in the world. Again, because the company went bankrupt, right? And because of that, now each pack is worth $500. Now imagine all of these things working for gold if you were to buy it, right? It's a finite amount of supply. Everyone agrees that it's valuable. It actually is valuable because you can use it as industrial purposes that like no other material can use, and also it's being hoarded by people as jewelry. Especially on the jewelry bit, according to BCG, about 50% of gold being produced is being used by the jewelry industry. So you can imagine how much of the gold being produced is just gone. That is a huge amount of gold that's just off market. And you apply that with the finite nature of gold itself, you can imagine that the scarcity becomes larger and larger. I know that's the 3 reasons, but the 4th reason for why you might want to consider buying gold as an investment right now is because in every economic downturn, gold prices eventually goes up. I say eventually because right before it, the gold price actually tanks. When the stock market tanks due to the speculation of a recession or the beginning of a recession, people are going to sell their stocks in gold to supplement their losses in other stocks. And because there's a huge volume in sales, it's going to drive the price of gold down. But as soon as people accept that the recession has happened, people start buying gold because it's much safer than investing in companies who can't support a business due to a failing economy. That is why it's probably a good investment for you to buy gold right now. And you can compare the price of gold in the last recession versus now, where there still is about a 10 to 15% difference, which means you can kind of roughly say there's about a 10 to 15% gain. I actually think it should be higher than that because between then and now, which is almost a decade, if not more now, about a decade, a lot of scarcity is at play. A lot more industrial needs have happened, right? And a lot more jewelry have been bought. And so I think that gold is worth a lot more than that. The reason why I don't recommend that you buy gold right now for the next 3 to 6 months is because I don't think the economy has fully, committed itself to realizing that we're in a recession. The government is in fact doing a lot to try to recover all around the world. All of them are trying to do this, right? And because of that, you see this volatility, this crazy volatility that's going up and down, up and down. I think that it's pretty much likely that a second dip is going to happen when the news media unanimously start talking about our economy or the world economy as a recession. Then I think it's in fact quote unquote safe to buy gold. But if you're more speculative like I am, yeah, you will have to babysit the stock a lot more like I am right now. And now I can in fact be potentially a good investment to buy gold. In a healthy market, gold is usually used as a way to diversify your portfolio. So a money manager, like a professional one, would tell you to put about 10% of your investments in gold. My opinion and what I'm currently doing is that I'm putting 20 to 25% of my investments in gold, because to me, there's an opportunity to be had. I never diversify my portfolio the way that a money manager might do it. I would focus on key areas depending on how the market is doing and which season the market is in effectively, because I believe that even if a second dip happens, it's going to grow. Of course, I'm also monitoring my money very closely, because if I can even catch my stock investment before the dip, then I can in fact make even more money by avoiding and buying on the low. All in all, I think it's a great time to invest in gold if you're looking for a 2 to 3 year roadmap. But for the 3 to 6 months roadmap, I'm not so sure, because I think the economy has not fully realized that we're entering a recession. Once that happens, I'm almost certain that a second dip is going to occur. Yes, I think that gold price is going to tank right when that second dip happens, because everyone's going to sell gold again to cover their losses. But after that, the gold prices will go up. You can effectively sit on 2 to 3 years and that loss will recover, and you're going to make probably 10 to 15% gain out of it. But if you want to avoid that altogether, just in case you don't know how deep it's going to dip, and that might make you feel stressed, I recommend that you sit it out. If you're interested in swing trading on gold for the next 3 to 6 months, I think it's great. I don't recommend holding it for 3 to 6 months. I recommend that you check your portfolio every single day, see what the market is doing, and make judgment calls. Probably trading, every 3 to 5 days. That's what I'm currently doing on the gold stock. Thanks for checking this video out. I hope you found this content useful. If you're looking for more content like this, please hit the like button and hit subscribe. It really helps me out. And I look forward to working with you next time.